Masha Gordon, head of emerging market equities at PIMCO, joins us on the show with her perspective on what's happened overnight. Masha, good to have you on the show. Thanks very much for joining us. What's your reaction to the Indian market hitting record highs in response to the state election results? Is the political risk out of the way now for India, since the expectation now is running high on who actually will win the general elections?
Well, look, it's clearly a very good predicament towards the May results, though we have to be cautious that we have only a fraction of Indian electorate participating here, but some of the more decisive swing in certain states has been a positive. And also the fact that, clearly this is happening with the backdrop of improving current accounts. So I think the combination of the political story that investors want to hear, and perhaps therefore the reaction is very cheerful in combination with a stronger macro. Is the political risk out? Look, I think it's futile to predict the results or to try to predict the results. This is certainly given us a greater probability that investors will see the results they want to see in May. But again, political picture can change, and also it can be much more nuanced than the cheer indicates. So I think the nuanced picture, sort of 3 months down the road post elections, will probably mean a different reaction.
Fair enough. You spoke about the CAD situation improving, and the data recently has been fairly encouraging as well. There is opinion that perhaps there could be one more rate hike in the works and then the RBI would pause. How are you reviewing the macro situation, and has the risk there also receded? You pointed out to some bit of positivity there, but do you think the risk has receded on the macro side?
Look, headline numbers look terrific. We have seen a very significant reduction in current account deficit. However, we have to be cognizant that, particularly in the last quarter, 3/4 of the improvement has been due to the gold import restrictions. Should that or were that to go away, clearly the current account picture, like for like, would look quite different. All of that said, is the improvement have been very notable. And it wasn't just the gold imports. Clearly, the recessionary cycle is suppressing demand. We've also seen the slowdown of the credit cycle, and the companies are going into self-repair mode, which means that they import less of the capital equipment. So again, we would be positive on the current account improvement, though found a note of caution that some of the improvement, or a large part of the improvement, is due to something that could administratively change overnight, particularly because of the smuggling story gaining traction, et cetera, et cetera.
Is your opinion on India within the emerging market pact changing? And is the Indian market pricing in a revival in the economy, in the political situation as well?
I think India currently stands out against other troubled EMs, such as, say, Brazil and perhaps China, as the country where we have seen a very positive policy action coming from the now maybe not so new, but the new central bank governor. I think we're yet to see that in other EMs. In Brazil, the policy action has been quite reactionary, and that's what's keeping another break at bay. In India, clearly a decisive, governor that is targeting inflation, that is not afraid of rising rates at the time of election and election cycle and slow demand. That has been taken very well. So should we see continuation of that, i.e. independent monetary policy raising the price of savings and changing the dynamics of the current account for good, coupled with election results that produces perhaps a better government, no matter what color of the government it is, would position India very well for the coming year. Add to that valuation that is not demanding relative to history, I think India will do or will fare very well against other EMs.
What's the view on the rupee then, which is also at a 4-month high within emerging market currencies? Are you more optimistic of the trend there?
Look, we look at the currencies based on the carry, volatility-adjusted carry. Indian rupee provides perhaps most compelling volatility-adjusted carry, but that again is conditional on continuation of the tough talk from the governor and the results of the election. So as it looks today, on the price-only basis, Indian rupee looks very attractive. Again, however, we have to see a fundamental change in indicators that have been Achilles heel of the Indian macro story.
What's your rating on India right now, Masha? Stepping into 2014, are you optimistic about India, and would that perhaps build a case for you to revise your rating on the region?
Again, from the equities perspective, and I speak on equities only, I think summing up some of the remarks I made earlier, India stands out as a country that has a more decisive policymaking, and policymaking is what kind of struck, or the eel that struck EMs in the past 3 years. So again, should we see a better delivery, and we have seen a much better delivery on the monetary side, India will look very well indeed. And we can find, a number of growing companies that are in the cyclical area in India that are priced not for perfection, but priced for a pretty demanding growth. And we do think that should we see acceleration of growth, reversion of some of the macro imbalances, those companies would do very well. So again, we are cautiously optimistic, and cautiously we are increasing the allocation to Indian equities. But again, that is subject to delivery. And we would be using, I would say, the pockets of weakness, and India provides many, as you know, to accumulate positions.
But would you go overweight on India over the next 6 months, given policy as well as reform potential?
Senator, that depends on our ability to find stocks. So as it stands today, we have used this summer weakness as an opportunity to accumulate banking stocks. Those are now much higher valued than they were today. So we would look probably in other areas of the market to increase our position. And we have more Indian equities today than we did, say, prior to the beginning of the sell down in the summer.
Okay, Masha, we'll leave it at that. Thank you so much for taking the time out and joining us live from London and giving us your view as well.